Want to trade double tap patterns for consistent profits? You're in the right place. Today I'm going to show you exactly how to trade double tap chart patterns, including how to determine their depths. Hello, my name is Polly and I can be a personal trader. I have a lot of experience that I can share with you. Subscribe to my YouTube and Telegram channel. Be a part of my community. So, if you're ready to trade the double taps like a pro, you're going to love this video. Let's dive in. Before we can learn how to trade a double tap, we first need to know how to identify it as a chart pattern. So let's look at the characteristics of the pattern using the illustrations. As you can see from the diagram, the market made an extended move higher but was quickly rejected by resistance first stop. The market then pulled back to support and subsequently retested at the same resistance level second top. Once again, the market was rejected from this level. One common misconception is that the double top pattern becomes tradable once the second top forms. The third is the double top is only confirmed and therefore tradable once the market closes below the support level neckline. Notice in these illustrations that the market is now trading back below the neckline. This confirms the double top pattern and signals the first part of the breakout. Now that we understand the dynamics and characteristics of a double top, let's look at a real-life example. Here we have a double top that formed of the EUR/USD daily chart. Notice that we have a well-defined neckline support level as well as subtle M shape that has been carved out of the result. You may have come across M and W double bottom patterns in your intraday travels. While these are considered separate technical formation, in my experience, they are remarkably similar to double top and bottoms. In fact, it's often hard to tell them apart. For this reason, I tend not to separate the two, but I do like to see a well-defined M or W from the pattern side trade. Okay, back to our EUR/USD tapping structure. Here is a question for you. At what point was the double tap confirmed? Care to wager your guess? If you guessed that daily close starts at above grid top, because we're trading this double tap pattern of the daily chart, we will need to wait for a daily close below neckline support. Up to this point, we have discussed the dynamics behind the double top pattern as well as its characteristics. You should also know how to confirm a double top breakout. Now it's time for a real fun part, finding out how to profit consistently from these setups. The first thing you need to know is that initial breakout is not what triggers the trade setup. What we need is a test of a neckline as a new resistance. So this ensures a favorable risk to reward ratio, which is an essential ingredient if you wish to succeed at this business over the long term. Here an illustration. So notice in the illustration about how the market resists their neckline as new resistance. So this is where we now have an opportunity to short the market. Let's revise our EUR/USD pattern to see if we can identify a favorable point of entry. In this scenario, we would have waited for the markets to break the neckline and then retest the level as new resistance. After retesting the neckline, we should look for bearish price action on one of the lower time frames to help confirm that the level is likely to hold as new resistance. So notice how the EUR/USD currency pair sold out heavily immediately after testing the neckline. First thing first, so we always want to use price action to identify potential targets for any chart pattern. It doesn't matter if it's a double top or a head and shoulder pattern. The best and most efficient way of finding a profit target is to use simple price action levels. It's called measured mode, and the concept is incredibly simple. But before we move on, I shall point out that there are in fact two terms you need to know. Measured mode, the distance in pips from the broken level of the pattern to a future point in the market. So measured objective, the level at which the market is likely to find an increase of buy or sell others. So to summarize, a measured moves specifically at the distance of something, while the measured objective defines the exact level of target. So to find the measured objective, you take the distance from the double top resistance to neckline and project the same distance from the neckline to a lower future point in the market. Here is an example from the year we used the double top. The distance from double top resistance level to the neckline in this case is 270 pips. So therefore we will measure an additional 270 pips beyond the neckline to find the possible target. So besides, I don't know too many traders who will complain about booking 270 pips of profit. A double top pattern without the close below the neckline is not technically a double top. Allow me to explain. I hear many traders counting two tops near an important level of double top all of that time. However, unless the neckline has been broken, they are mistaken. What they think in the reversal pattern could just be consolidation. So you see, no double top is complete until the market closes below the neckline. Not only is not complete, but attempting to enter before having confirmed the top can get you in a lot of trouble. Let's trade. Currently, I'm in the British pound Japanese yen pair. A beautiful double top has formed here. I think it's worth switching to the same trading platform and see what we can observe on a 15 seconds time frame. While everything looks much more appealing here, it's worth entering a 5-minute trade for $200 on the downside. Now let me switch back to the larger chart. I also want to draw attention to the resistance zone here. As you can see, it's a good zone from which the price has rebounded 3 times. Overall, everything on the chart indicates further price decline. I don't expect anything other than a decline, and I believe that a decline will be rather insignificant. Take a look at the impulse from which the price entered. In the double top pattern, it was quite strong. Therefore, I expect an impulse of the same thread. There are 4 minutes left until the end of the trade, so we can simply relax and wait. So the trade closed constantly with a profit. The price moved as expected a strong downward movement. The double top worked perfectly. In general, the double top is one of the few patterns, based on my experience, work in 90% of cases. Therefore, I recommend remembering it and using it as training as often as possible. So the double top is a reversal pattern which typically occurs after an existent move up. It signals that the market is unable to break the key resistance level. There are 3 parts to a double top. First top, second top, neckline. A double top is only confirmed once the market closes back below neckline support. The trade setup is formed when the market returns the neckline as new resistance. A measured move objective can be used to find a potential profit target. So, to find this, you simply take the distance from the double top resistance level to the neckline and extend that same distance beyond the neckline to a future lower point in the market. To end the trading session with a profit, you need experience, intelligence, and market understanding. Fortunately, I post all of these qualities, so if you want to trade with me, subscribe to my Telegram channel and of course my YouTube channel. Let's make money together.